Hello traders, welcome back to the channel. Today I'm going to go through why I only trade one time frame. So I actually did a tweet about this and people were saying, why do you trade one time frame? Which time frame do you use? So today I'm going to go through how I came to the conclusion of which time frame to actually use, the pros of using one time frame and the particular time frame I use, and why I do it. So we're going to start by talking about why I do it and why I think it is very, very good for you guys to actually trade with one pair, one time frame, one particular type of setup in your trading, and hopefully you guys can build a conclusion whether you want to do it or maybe just learn a little bit about my personal trading. So let's get into the video. So as you guys know, I talk a lot on the channel about doing data testing, data collection on your strategy. You should be able to ask someone that's a trader, what is your strike rate? If they can't say their strike rate on their strategy, they haven't done enough data collection or strategy testing on TradingView, back testing, forward testing to even know how profitable their strategy is. So I do believe that if you actually put in the work with spreadsheets and spreadsheets worth of data, then you can know exactly, firstly, when to trade, when not to trade, which time frame, which pair, everything like that. The main reason I actually like having one time frame is because I want to be able to look on the charts. So let's say I go to my computer, it's the beginning of the trading week, I open TradingView. Okay, is there a setup? I don't want to have to take half an hour to be looking through. Okay, got to check the daily, start with the weekly, to the daily, to the 4 hour, to the 1 hour, to the 30 minutes, to the 15, to even see if there's a potential setup. I want to be on one time frame. Boom, is there a setup for this session? No, okay, off the charts. Simple as that. I don't want to be sat there for hours and hours and hours looking for potential setups on multiple different pairs through multiple different time frames. It's just not really something I want to be doing. So this is why I'd switch to one time frame. Even if you're cycling through all these time frames, you can make a mistake. Maybe you forget one of them. Or let's say the hourly says something that you're bullish. 15 minutes says you're bearish. What are you going to do? And if you don't actually have a strategy fully in place, what are you going to do in this sort of situation? You're pretty much going to be stuck. So all these issues are eliminated by just using one time frame. One time frame, one pair, one setup, one session. Simple as that. So a few months ago, I actually started testing different things in my strategy. I started by testing different risk to reward. So I had a spreadsheet specifically designed for risk to reward testing. So what I'd do is I'd back test like normal. And then I just test, okay, did it hit a 1 to 2, 1 to 3, 1 to 4, 1 to 5, 1 to 6. And then you can kind of see, okay, majority of my setups hit a 1 to 3. Which is what I found. So then I know this is the percentage chance of my setup actually hitting a 1 to 5. This is the chance of it hitting a 1 to 2. The exact percentage chance of it hitting a certain risk to reward pretty much every single time on your strategy. Then I started implementing, okay, I'm going to use a 1 to 3 on majority of my setups. And then obviously it's worked perfectly. This is especially good, this risk to reward example for people that, let's say their trade goes into profit and they target way too far. They're targeting 1 to 8s, 1 to 10s, 1 to 20s, all that sort of rubbish. And if you're only going 1 to 3, 1 to 4 into profit, and then reversing to your stop loss or reversing and hitting you out of break even, something needs to be changed there. And figuring out which risk to reward works best for your strategy solves all the issues. You know exactly, okay, I know my trades usually go to 1 to 3, 1 to 4 as an example. What if I just take profit at 1 to 3, 1 to 4? And you test that, see your results, because obviously you can't do that depending on your win rate. But you can kind of realize, okay, I can actually just take profit at 1 to 4 every single time. Yes, I'll miss out on those really, really big long runners, but I'm missing out on so much profit trying to hold for that big profit when it doesn't actually come very often. So after testing the risk to reward, I then moved on to which days of the week work best. So firstly, what I do is I write down my entry day and then my exit day. So which day I enter trade, which day I exit the trade. And I found that 2 specific days of the week never got entries. From my backtesting, I backtest every single day. So I go through like a whole year of price action pretty much. So let's say for the example, I started in 2021, January 1st, sessions marked out. So when you're actually trading on the charts, otherwise it's very unrealistic. Okay, Monday, is there a setup? No. Tuesday, is there a setup? No. So then if you notice that, okay, Monday and Tuesday, there's never any setups for your strategy, don't even go on the charts on Monday and Tuesday. There's literally no point. Firstly, you could force trades, you could overtrade, you could get frustrated that there's no setups, then you try and adjust it to try and get a setup to fit when it's not actually there, and it can just be a disaster. So what I do is I've eliminated these 2 days from my trading now, so I just pretty much don't trade on those days. Simple as that. And after this, I actually moved on to time frames. We'd already figured out the pairs before this, so I knew that it was going to be GU for this particular strategy in the London session. So we already knew that. That's why the testing was quite easy to figure out the time frame, the risk to reward, and the days. So with the time frames, what I did was I kind of went through the year and tested it on the 30-minute, the 15-minute, the 5-minute, the hour, all the different time frames to see, okay, which gives the best risk to reward, which has a higher strike rate, which one actually happens more often. Because obviously, if a setup only happens once a month, and let's say you miss it, or your stop losses are pip too small, you've missed all your profit for the month. So I wanted a time frame which was going to give me setups daily. I don't have to take them every single day, but gives setups daily and was kind of fairly quick. So I'll get into that in a bit later. But yeah, and I found a time frame which is absolutely perfect for this. But before we get into that, I just want to say, if you are going to put the work in with your data collection, strategy and everything, have a large sample size. You don't just want to have 100 trades, because you can't really base it off of 100 trades. Because let's say you did backtesting for those 100 trades, but they were all during a market that was consolidating. How are you going to trade if the market then starts trending for 6 months? You're not going to know what to do. You've only backtested consolidating markets. It's going to be very, very tricky for you to actually do that. So you kind of want to have a large sample size, let's say over a year, 2 years of price action, to know that, okay, this kind of works in every single market condition. So the time frame I actually chose was the 15-minute time frame. This was outperforming all the other time frames. It was making me the most profit, and even to this day, it's the only time frame I actually use. On my trading view, I'm pretty sure it's the only time frame I actually have. I might have the hour on there, I'm not sure, but the only time frame I use is the 15 minutes. So what are the pros of using the 15-minute time frame? They are, firstly, quicker trades. Myself personally, people might be different, but I don't want to be in trades for 5, 6, 7, 8 hours. I want to be in for half an hour to around 2 hours max. Just fits my life, my strategy, because I don't want to be on the charts all day. That's pretty much, that's it. So I set my alerts, and then if my alert gets triggered, I go onto the charts, I enter, if it's valid, obviously. And then I kind of want to be in a trade for like 2, 3, 4, 5, 15-minute candles, and then my TP is usually hit by then. Because another pro of the 15 minutes, you can get tight stop losses. I'm not talking tight as in like SMC, 2-pip stop loss, tight, that sort of stuff. I'd never do that, because firstly, the brokers I use, I wouldn't be able to do that on GU anyway. It'd be literally a disaster. So what I mean by tight stop losses is like 10 to 15 pips. It's fairly tight. It gives good risk to rewards as well. Consolidating markets, it's obviously, you can get tighter ones. You can get like 5 to 10 pips, or even like 7, 8 pips. But in like a trending market, high volatility, you can get like 10 to 15 pips relatively easily. I think my average is like 10.9 or something like that for my strategy. But it is very, very nice, because even on 15 minutes, each session, you could probably get like a 1 to 2 or 1 to 3 using these 10 to 15 pip stop losses. And that's why I actually use them. Like I said, you can get like a 1 to 2, 1 to 3 in each session. Another pro is that you can trade every single session. I'll show an example of this in a minute on gold, which happened yesterday. How if you miss a trade in London session, you still have a chance in New York to enter, on this trade, or not the same trade, but like there's another opportunity. Let's say you missed the shorts in London session, you could catch the longs in New York session, or you missed the shorts in London, you can catch more shorts in New York session. There's not like on the 4 hour when you're waiting ages for a setup, and if you miss it, your entry's gone, you have to wait a week for another setup. That's just not really what it's like. You can kind of London, I missed my setup. A few hours later, New York, doing analysis. There's another setup. Absolutely perfect. So if we go on to TradingView now, here's an example from Friday. So if we just mark on 8 and 2. So obviously this area here is London session. So this area. And obviously I'm not saying buy here, sell here, buy here. It's all hypothetical. So I'm not saying I entered these or anything. I'm just showing you an example of how the 15-minute is a very, very good time frame before you guys start commenting. So you could have even caught buys here up to this level. You could have sold here. You could have bought. You could have sold. There's so many different opportunities. And based on, risk to reward wise, let's say you were selling at this area. Like I said, obviously I was talking about GU, and this is obviously gold. But, the same thing sort of applies. Look, that's a 1 to 3. The buys would have been probably similar, and you can catch a 1 to 3 in that session very, very easily. And then what happens in New York? New York breaks out of this area, breaks out above the London high, obviously. And this is when you could then see what happened in New York. We got another 270 pip push. So let's say you missed London session, you missed a 1 to 3. No, missed the setup. New York's there, another 270 pip move. So, there's multiple different setups. You can catch shorts, longs, everything. Just a little quick example. Not going to go into any strategy stuff here. That is for my mentorship group, which is in the description if you guys are interested. Everyone is making a lot of profit. I hardly actually do any promoting, so yeah. So to end this video, if you guys are actually going to pick a time frame, make sure you go into TradingView, into your spreadsheet, and collect so much data. Use formulas. I've done a video on my formulas before on how I collect the data. The more, the better. It's simple as that. The more data you have, the more you can realize, okay, this time frame is more effective than this time frame based on statistical facts. If your data says 30 minutes is more profitable than an hour, trade the 30 minute. It's quite simple. It makes you more profit, so trade with that time frame. I guess you could use both and combine it depending on your trading styles, but I personally prefer one time frame, one session, one pair. That's pretty much it. And then you can make so much money. So I'll catch you guys in the next video.